Today we are covering exclusions and endorsements for the property and casualty exam. Think of a standard insurance policy as a base package. Exclusions are the specific items listed in that package that are not included. They exist to narrow coverage for perils that are either uninsurable, like war, or better covered by a different policy, like floods. For the exam, you must understand that an exclusion is the insurer explicitly stating what it will not pay for. A classic exam scenario involves a homeowner's policy, which almost always excludes flood damage. If a question describes flood damage to a home with a standard policy, the answer is that the loss is not covered because of the exclusion. Now, let's talk about endorsements, which are sometimes called riders. An endorsement is a written modification to the base policy. These changes can add, remove, or modify coverage. And they are the primary way to tailor a standard policy to an individual's specific needs. A key concept for the exam is that an endorsement always overrides the original policy language. If there's a conflict between a printed exclusion in the main policy and an endorsement, the endorsement wins. This is a frequent exam trap. For instance, a policy might exclude damage from sewer backups. However, the insured can often purchase a sewer backup endorsement. If an exam question mentions a standard sewer backup exclusion, but also states that the insured added a sewer backup endorsement, any loss from that peril is now covered. The endorsement effectively deletes that specific exclusion from the policy. Another critical area tested is how endorsements handle high-value property. A standard homeowner's policy has coverage sublimits for certain items. For example, it might limit theft coverage for jewelry to $1,500. An exam question might describe the theft of a $10,000 ring. Under the base policy, the insured only gets $1,500. This is where a scheduled personal property endorsement comes in. This endorsement allows the policyholder to list specific high-value items, like the ring, and insure them for their full appraised value. With this endorsement in place, the $10,000 ring is fully covered, overriding the standard policy limit. For a memorable phrase, just remember this rule for the exam. The endorsement is the boss. Whatever the endorsement says goes, even if it completely contradicts the main policy form. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.